Bloomberg Economics is estimating that core inflation could be the slowest since 2021. In theory, that's a good thing. Let's see if it is in practice. Bloomberg's Valerie Tytel joins us. Valerie, walk us through the trade that we could see play out today.
It's expected to get quite a soft number today, and I think the smart consensus out there is even going for a softer number than what we see on the Bloomberg consensus screen. But it has been an uncomfortably gradual easing in inflation. We really need to start seeing a 0.2 month-on-month or a 0.1 month-on-month in order for the Fed to feel a bit more comfortable here. Now, I want to take a look at what's been going on in the VIX market. I think something is really interesting I wanted to point out. The one-day VIX going into this is pricing the lowest one-day vol over the entire cycle. And that's because economists have been rather accurate in predicting inflation in 2023, and it has continued to fall. So perhaps we could get some equity market jump on a soft print, but it's unlikely to be the kind of volatile days that we've had, especially when you look at one of the biggest volatile days of last year all around these CPI prints. And that's just because it's really unlikely to shift the Fed hiking narrative for July. Markets are really expecting another 25 basis point rate rise from the Fed in just 2 weeks' time. But we do hear from 3 Fed speakers after the number today. We hear from Kashkari, we hear from Bostic, and we hear from Mester. Now, if we get another cool non-housing core CPI print, it goes a long way from strengthening arguments like to some officials like Bostic that say the Fed can afford to be patient, let the long and variable lags take hold, and let that push inflation lower itself. So keep an eye if we do get any shift in language from these Fed speakers after the CPI print this afternoon.